From a tax standpoint, we know that as dollars are being distributed, there's going to be taxes that you are potentially paying on those investments. It's either going to be taxed at ordinary income rates, which is going to be the highest rates. It's going to be at capital gains rates, which is lower than ordinary income, but also higher than not being taxed at all. And then the third would be tax-free. As planners, we want to have frameworks where we are diversifying in each of those. We don't want to be overly concentrated in something like a traditional 401k, as an example, where the client says, look, I have essentially tethered myself to whatever tax rates are going to be throughout the years. And if tax rates continue to go up, well, that's just less of my money I'm going to be able to receive because I'm going to have to pay ordinary income on all of that. We want to have, again, specific allocations towards that. So we're not opposed to that, but we certainly wouldn't want to get more than, say, a third of the dollars in something like an ordinary income taxable account. We then look at capital gains taxes. Typically, that means that you have paid taxes on those dollars and then reinvested them. And as you do, there's going to be taxes on those gains. Again, that's a place that we just don't have a crystal ball. We don't know where taxes are going to go long term, but there's certainly been precedents that capital gains rates could go up from where they are today. And that's something that it becomes our job as planners to think about, not just the here and now, but also what could be. And so we want to make sure that we're not, again, putting ourselves in position where those dollars become worth less down the road. Similarly, we wouldn't want to have more than, let's say, a third to half of dollars being invested in capital gains taxable investments. And then lastly becomes tax-free. This is, of course, everybody's favorite because you don't have to pay taxes whenever you go to pull those money out. The government makes that really challenging. And we recognize that there's challenges with that, especially as our clients are making higher incomes, having higher levels of net worth. And so it becomes our job to be really strategic in figuring out what are the ways that we can create somewhere to a third or half of dollars into tax-free accounts so that no matter where taxes go in the future, we know that we have a third to half that we're going to be able, again, to play offense with those.